Good morning, Predicted Trades family. I hope everybody's doing well. Hope you all had a great weekend. Happy Halloween. And hope we're ready for November. Time is flying. The year's almost up. So for a quick review. Friday, we had that monstrous drive up. That pretty much just opened and took off. Gave one little pullback and then just carried for the rest of the day into close. You can see we also hit a key level and flagged for a bit, then took off for more. I only point out the pullback and the flag because those are your opportunities on a very strong day to load in for more and more, right? And as we can see, we took off from that 3800 pre-market and just rode our way up through each key level and zone up to 3900 and even hitting that 3922 after the close on Friday. We have a small gap down and a little fade. That is coming in right back at our key levels, right back at that flag. But before we dig too far into where could we go today and this week, let's go ahead and take a look at a few things on our calendar. First up, let's look at earnings. There we go. So, another very busy week of earnings, right? Our whole map is full, versus other weeks when earnings start where we just have a few names that report. This week is very busy. We've got a bunch of energy, BP, Marathon. We have a bunch of healthcare that's reporting. Stryker, Humana. So we got a bunch of healthcare. The big names in tech this week. We have AMD on Tuesday. Airbnb, I'm not necessarily calling that a tech name, but we also have Roku, Qualcomm, PayPal, Coinbase, Block, which, Square. So yeah, very busy week. So we'll have to see how the market absorbs all of these pops, drops, whatnots. Ooh, Datadog, Peloton, Etsy, Carvana, Twilio, just tons, Starbucks. So very busy week of earnings to keep an eye out on. Big names that I'm watching, definitely watching AMD on Tuesday, Roku, Qualcomm on Wednesday, maybe a little bit of Etsy, and then definitely PayPal, Coinbase, and Square, right? They're all in the same space and all reporting after the close on Thursday. So that's the big names in earnings. And again, in our server, we have that earnings channel where we drop in earnings whispers so that you can get a look at the forecasts and whatnot. We also have a stock news channel. Just want to point that out to some of the new folks, where we drop in, a bunch of tweets of breaking news. Let's see. Next up, let's take a look at the economic calendar. So for today, right after the bell, we have Chicago PMI. And then tomorrow we have a little bit more PMI data, manufacturing data, right? All of this is just manufacturing data. The company's making all the toys. How are they doing? Then we have some jobs data as well tomorrow. Wednesday, we also have jobs data with the ADP employment report that we get once a month. And then the big one on Wednesday is FOMC with Powell speaking right after. Oh, hey, and I'm seeing in the chat morning, folks, we got Excellent, we got Blackface, we got JJ Cabrera, Darkpool, Algo. Nice to see all you folks in here this morning. So yeah, big one this week, we have FOMC. Are they going to raise another 75 basis points, or do we get something a little less? I feel like I saw the consensus on the street might be leaning towards a little less on this month's announcement, but we'll have to see. It's nice that we get it right at the beginning of the month. That leaves the rest of the month open for some interesting price action, especially with the rally we've been having. Thursday, we have our jobless claims, some labor data again, some more PMI. And then Friday, the big one is non-farm payroll, which might not seem that important, but it is. And we can see some big movements, pre-market and for the day based on how that non-farm payroll comes out. So, on the economic calendar this week, starting off with manufacturing data, going into FOMC, and then a bunch of jobs data. Let's see, next week, what do we got on the horizon? I always like to just look a little ahead. Next week, we've just got some CPI on Thursday and University of Michigan on Friday. So pretty light week next week. Once we get through FOMC and NFP, we might see some interesting moves. So, where can we go this week? We've made our way up to the top of a daily squeeze. That's what this big cloud is. And we keep pushing further and higher so that cloud gets thinner and thinner and ready to fire. So, a couple scenarios this week. We could continue our rally into FOMC, kind of taking it up just in case it's going to come down on that rate hike. We could also have a scenario where, we had our good push Friday pushing back to new highs. And we could start a steady, slow fade going into FOMC and basically just slowly fading back to some of these key levels and not really giving out our big moving averages. On my chart, these horizontal kind of stair-stepping lines are daily moving averages. The purple is the daily 50, which falls right in our zone, back around 38.50. The purple is the daily 50, the blue is the daily 8, white is 21, and this orange is the daily 15. So if we do start a slow fade back, those moving averages are kind of the target to get back to for a test and to activate buyers to take us higher. So for today, we do have a couple of squeezes coming into the open, a 30-minute and a 1 hour. That 1 hour sits down right at that 38.78 key level where we flagged on Friday. So we could drift towards that at open. We could hold that hourly squeeze bottom and catch a bounce to come back up and test the top of that hourly squeeze to fill the gap and retest the high from Friday right after close. If we do push further beyond that, if this rally does just continue into FOMC, next key levels, that 39.22, 39.41, 53.61, 39.80, where the second Keltner to the upside sits, 39.96, right near that big psych level 4,000. Whoop. Let's just look at this last week. So we've had 2 nice Fridays in a row that we rallied strong all day. Leading into Friday in prep, I said as long as we hold above 37.73, especially with the data that we got on Friday, PCE, another inflation metric, as long as we held above that 37.73, where the daily 21 sat, it's very strong for a big old bounce, especially with Apple leading the market. We'll take a a look at Apple in just a couple of minutes. But, you know, if you're new to us, definitely go watch that prep from Friday. Because I talked about, you know, we have our sign, big sign for a big day up, and that's what we got across the market. I think I saw a headline that Apple had its best day since 2020 on Friday. So, let's see if we can hold up at that 38.78 if we get there. We also have our first Keltner up right there as well. So we got a lot of support sitting and waiting there to try to bounce us higher. If we start to give that out, then we're coming back to this zone in the daily 50 for today. NQ. A very strong day on Friday, but NQ has been a little bit of a lagger. I say that just because it was below its moving averages and fought back above, but still below the daily 50, while the other indices are above their daily 50. For today on NQ, coming back to settle at this 11,500. Let's see if we can hold up there and at this hourly squeeze bottom. If those start to give out, we're coming back to test this daily 8 and daily 21, which are now crossing over each other. So that is your magnet if we do start to give out this morning and come back to test what we got through on Friday. We also have some of these highs right here around, 11,450. So let's see if we can hold 11,500. If not, going to that 450 and that 400 to hit these daily moving averages, where I expect buyers to step in and give us a bounce. But if we can hold that 11,500 and start to work our way up through 11,600, coming back to fill the gap. Next stop is that 677 that we kind of got above and set this high. What was that, last week? So if we can't get going through 600, looking to get back to that 677, back to this high at 735, and up to the daily 50, right near that 760, 11,800, big psych level. So those are your targets to the upside. Come on, Toss, catch up. What are you doing? There we go. Ready. So the ready has remained nice and strong above its daily 50 and getting close to the daily 200, which sits just above, right near that second Keltner to the upside. So for ready today, let's see if we can hold that pre-market low, which if you look left is also the highs from Wednesday and Thursday. So let's see if we can hold up there, start to bounce up to fill this gap, get through 1860 and work our way up to 1880 with that daily 200 at 1884. If we start to lose those highs in the pre-market low, then we're likely coming back to retest this daily Keltner at about 1830. Should that give out, we might be talking back to 1800 and the daily moving averages below. YM. Come on, update the chart. There we go. YM, pretty much the strongest index because it already got back above its daily 200 on Friday. On ES, it's still way above. On NQ, it's still way above. On Ready, we could get there today, but on YM, we got there on Friday after this very strong rally all week. We just saw how NQ, Ready, ES, they kind of hit highs Tuesday or Wednesday and then faded back into Friday. YM just stayed strong and stayed above that 31,800. And now we find ourselves knocking on the door of 33,000. So for today on YM, if we do continue this slight downtrend with this gap down, Obvious target here is to try to hold this 32,500 where that second Keltner to the upside sits. Hold this 32,600 where the daily 200 sits. So we've got 500 and 600 making a zone of support where I expect us to bounce once we get there, to try to come back up to fill the gap at this 32,900, 33,000, and if we can keep going to the upside, about 33,200 is where the third Keltner to the upside sits. 33,500, the next big key cycle level past that. If we start to lose this zone at all at 32,500, then we might be coming back to these recent highs, 32,400, and what is this? 32,200 would be the next targets to the downside, with that daily 8 sitting right near that cycle level of 32,000. And one last thing I'll point out on ES, just looking at this chart that I always have up and review sometimes, it basically has moving averages from each time frame. I like to talk about the 45 EMA as a true change of trend whenever we break that, but I track it across different time frames. So for today, we're basically tapping and bouncing at the 15-minute 45. That's this line that I'm hovering over. 15-minute, next is the 30-minute 45 at that 38.68. Then we have the 1 hour and 2 hour down near this 38.43. We have the 4 hour sitting down at 38.07. So basically just saying we can come down to test these things, and if we bounce and rally right back, this is just a measured pullback to hit key moving averages and then take off again for more. So just saying, even if we do get down to this daily 8 today and 38.07, which would engulf Friday, that's still testing moving averages just to bounce again. Not necessarily saying we get down there today, but just something that I track, because we have been on a good move. Let's go to a 15-minute. See how this works? We were on a good move, bouncing off of the lower time frames, and then from Wednesday into Friday, we pulled back, hit that 4 hour 45, and then took off from it, pushing higher. So just saying, we can drift back. Basically this 38.43 going to be a big one. Definitely expect us to bounce at this zone at those lower time frame and 1 hour, 2 hour 45 MAs. So that was just the last thing I wanted to cover on ES before moving on to individual tickers. So Apple reported earnings. We had that reaction that basically also started because Amazon was dumping so hard. Amazon had poor earnings, but Apple had decent earnings. And by the time we woke up on Friday, we had totally recovered the drop and opened basically flat. Whenever we open flat on a big name like Apple, it provides amazing opportunity, and we see the calls pretty much land right in our beast zone at open. The 150s and the 155s for Friday made insane moves. I think those 150s went like 20 cents to $5. I think those 155s went like 2 cents to 200, or $2. Sorry, they went $2 to 200. Either way, Apple made a great move from this 145 zone right through these levels up to the next zone at 153.8, 154.7. and even made it to the daily 200, one of the first big tech names to get back. On the slow drift and gap down that we got overnight, basically pulling back to our zone. Should we start to slip this zone, then we're coming back to test this daily 50 and first Keltner to the upside right around 151. Where I would expect a bounce and an attempt to come back and continue back to the daily 200 above and up to 160 as the next target. But if we start to lose that daily 50 and that 151, likely coming back to 150 and these key levels to test for another bounce. AMD reports tomorrow after the bell. Had a great move on Friday. They love to do that. So they have earnings this week. All of the options for AMD this week are going to be elevated with extra IV, right? Extra volatility, so their premium will be jacked up for earnings. They love to, on the Friday before the week of earnings, they love to run things up, especially in big tech. So just something to keep in mind as earnings season progresses and as we, when we look forward to the next earnings season. So this week, let's see, AMD made it back to the daily 21 around the 62. If we start to fade back, we've got the daily 8 right near 60. We've got the daily 15 right near our key level at 58. 56 provided a great floor. Talked about that for weeks. That 56 was a big key level, and we held it for weeks. I'd add more time so we could see it, but what's the point? So if AMD continues to the upside, basically the next big target to get to is up to 65, where that first Keltner sits. Well, let's see if today and tomorrow we just kind of drift and hold these moving averages and key levels at 58 and 60. Amazon. And went down on earnings, tagged some key levels, and then took off from them to try to get back. Overall, let's see if Amazon can hold above 100, start to push its way back to 105, 106. And to fully recover this earnings drop would be getting back to about that 112 of where our daily moving averages sit. BA. Also reported last week. I talked about on prep right after earnings, and I just repeat this for some of our new folks to try and help educate you if you weren't around last week. Whenever we have something like BA that reports before the bell, and we have a big old candle like this that wicks way down and way up, whenever we test one end of that candle, you want to be ready to go test the other end. So we can see BA popped up and looked like it was going to take off, but it perfectly stopped right at that candle from when they reported. And then you can see it went down to visit the other end of that candle, and then it went for more. On Thursday and Friday, had some nice recovery pops, and basically working its way back to these moving averages. So on BA, we want to keep an eye on it to see, does it slip back to 140, where the daily 8 sits, this key level at 138.5, where the daily 21 sits. If we can hold there and start to bounce, that looks good for upside on the market. BA has some weight to it. If we can't get going to the upside, looking to take out that daily 50 at around 143, kind of near this pre-market high, and continue the journey back up to 150. But we do have a range that has been set from earnings. We could kind of just chop around this range and go sideways. BA has been on a good drive up into earnings, profit taking, and looks like it's starting to get going again. So let's see if it keeps going or just starts to go sideways a little bit into FOMC and some of the stuff we got this week. Cat. Man, Cat had such a big move last week. They reported earnings on Thursday pre-market, same as BA. And I talked about on Cat all last week that daily 200 was right near that psych level of 200, and if Cat reports decent earnings, that's 200s. Or if the Cat reports decent earnings, it would shoot through 200 right up to the next key level. Those 200 calls on Monday were like 20 cents, and I think they ended the week at like 20 bucks. Not even joking, you can go look at it. So I know maybe most of you don't trade Cat, but she does provide some awesome opportunities here and there, right? So Cat, let's see if it can stay above 212. It is up past its third Keltner. It could just kind of start to go sideways and allow those Keltners to step up. If we start to lose that 212, coming back to test 205 and 200, where the daily 8 has now crossed over the daily 200. So if we do see some pullback in the market, or even on Cat, when it gets back to that 200, could set up for the next leg up and allow those Keltners to slowly step up further. Coin reports this week on Thursday. It's made some nice moves, but you can see just drifted back to moving averages, and on Friday really didn't do anything. So for this week, going into earnings, we have a 4-hour squeeze right down at the bottom of our moving averages near the 68. So I wouldn't be surprised to see coin hold 68 and try to stay above its moving averages going into earnings. If it can get going to the upside, that's 78.56, the upside target. If they report good earnings and keep going, at 82 and 87. If we start to give out that 68, likely coming back to this 61, 62 area at the bottom of this daily squeeze. Google. Ran into the top of a daily squeeze, didn't have the best earnings, and now we're down at the bottom of the daily squeeze, had a decent pop off of it on Friday, back to this shaded zone around 95, 96. If we start to lose 95, coming back to retest this 93.5, or potentially this 92, 91 zone. But if we can hold up at 95, start to work our way through 96, then we're looking to get back to that 98, where our moving averages sit, that psych level 100, and try to work our way back up to the top of this daily squeeze. On GS, we had our bank earnings a couple of weeks ago, and all banks kind of reported well and had good reactions. This is also why we track moving averages. You can see we had good reactions, ran into the top of a daily squeeze, pulled back to the daily 21 and held, and then just started this ramp up from 310 to 340. What was that? Oh. Sorry, dropped something. Let's see, GS, if it can keep going, basically big targets are to get back to this 347.5 where the third Keltner sits, and 350. If it can just keep trucking. It is getting near third Keltner, so if it takes a break, big targets to the downside, 330 where the daily 8 sits, 325 where the daily 200 sits. JPM. Same thing, they reported actually a couple of days earlier than what our chart's showing, and had good reaction, and have basically just been working their way up from Keltners to Keltners, right? Since we departed from the daily moving averages. Went on a slow grind up to the daily 200 and this big key level at 125. if she can keep going, you know, it's basically trying to get to 127.5 where that third Keltner sits, and then 130. If we start to slide back, the daily 8 sits at 121, and that first Keltner around 120.5. Meta. Down hard on earnings at like 6-year lows. This thing is not going anywhere right now, so I'm not paying attention to it. To me, this is not part of FANG right now. I guess we just have ANG, or it's not part of MANG, it's just ANG right now. So basically, just I'm not focusing on Meta, and I highly suggest that you don't do it as well. Let it get back over 100 and start to actually prove itself, and then we have some levels to play back to. But down on earnings, really no good news in sight on Meta. Leave it alone for now. Microsoft. Like Google, went down on earnings, made it to the bottom of a daily squeeze and back to some big key levels, and then took off from them, working its way back above this big key 232. We have 230, where you can see we tried to set in a base. So now that we're back above, basically I'm looking for this 230, 232 to hold this week on Microsoft, and to start to work its way back through these moving averages, right? Basically, first targets, getting back to the daily 21 at 238, back to 240 psych level, 241, big key fib level, and then work our way back to the daily 50 up above, that 250 and 255 up at the top of this daily squeeze. Let's see if we can get that continuation. If we start to lose this 230, coming back to 225, maybe even that 222.5. But then we're setting up more of an H. Instead, I want to start seeing a higher low get set in off this zone and work our way higher. Netflix. Up on earnings and has been providing some great opportunity the last couple of weeks as it trudges higher through this very big gap zone. This very big gap zone spans, you know, from that 245, we closed right underneath it. We like tapped it, closed right underneath it, then gapped into it, meaning we did leave some of a gap behind. Basically around that daily 200. And where the daily 21 sits is where the remainder of the gap is. And to keep going and get through 306, getting back to 333 is filling that gap from previous earnings. So let's see if let's see if Netflix is going to continue to trudge to the upside and get back to filling this gap at about 333 this week. As you can see, it pushed up nice on Wednesday, getting to that third Keltner, and now it just goes sideways. Very, very tight price action, tight squeezes. So let's see if it starts to break out over 305, 306, right? Then we're going to start firing those squeezes and continue to the upside to fill the gap. If we start to slip back and fire these squeezes to the downside, then we're likely coming back to test these daily moving averages. The daily 8 at 284, the daily 200 at 270, and if we get to that daily 21, we're kind of tapping the gap that we left behind. NVDA reports earnings later in the month, so like mid-November, but could make a nice move this week off AMD. So if you know, how would I play AMD earnings? I would play AMD after they report. I might play NVIDIA into AMD's earnings because it could make a nice move with AMD on sympathy. If we do slip a little bit today, this 135 is where the daily 50 sits. If we start to lose that 135, it's back to 130 where the daily 8 sits, 127 where the daily 21 sits. But if we can hold up at that 135, then we're going to try to push higher through that psych level 140. Second Keltner up is at that 141.5. And we've got a daily squeeze top at 145. Actually, sorry, it's a 2-day squeeze. Yeah, 2-day squeeze top at 145. Next big key fib level around 147.3. QQQ. Made it up to this big key level of 280. Let's see if we can hold the squeeze bottom, which is also some of the highs from Thursday and the lows from Wednesday. So let's see if we can hold that 277.5, 278, work our way through 280, back to 282 to fill the gap, and continue up to 285, 286 where the daily 50 sits at the top of this daily squeeze. If we lose that 278, coming back to 276 where the daily 21 sits. Let's take a peek at snow. It's been a little while since we've looked at that. They report at the end of the month and getting near the bottom of a daily squeeze, so they could be setting up to base and work their way back up. Something I'll keep an eye on this week. Maybe let it get down to this 150 at the bottom of this daily squeeze. And they might start loading up over the next couple of weeks to take it back up into earnings at the end of the month. So nothing really to do right now. Let's just let it come down and settle. SPX. Took off from that 38.15, 3,800 on Friday. And got up near 3,900. Going to be having a 20-point gap down. So going to be opening near that 38.80. On a dip, let's see if we can hold that 38.60, that high from Thursday. If we lose that, coming to this 38.42, 38.50, where that daily Keltner and daily 50 sit for a bounce. To come back and fill the gap, get back to 3,900, and if we can keep going up to 39.30, where that second Keltner to the upside sits, third Keltner is up near 4,000. SPY. Let's just update this a little further. There we go. So SPY, we made it through our zone here at 380, 381.5, and trudged on up to our next zone on Friday. We're now pulling back to the bottom of that zone, so let's see if we can hold pre-market lows. Maybe even 385 on a dip to try to get back up through this zone to fill the gap to 390 and keep trudging. The next Keltner at 392. Psych level 395. Ooh, and this 395.8 is a big key level. So I could see us catching a bounce, getting up to that 395.8, and then stalling going into FOMC. And then obviously next big level is 400, where the third Keltner to the upside sits. If we start to lose that 385, we could be coming back to test this daily 50 at about 383 at the top of our zone here. And if 383 doesn't bounce us, then 380, 381, somewhat engulfing Friday. We'll take a look at Square. Tight squeezes, they report on Thursday. To me, I don't see much to do here. It's going to be stuck in this range, probably going into earnings. If it can start to take out 62.5 and this daily 50, can try to work its way up into this daily squeeze top around 65. But we'll keep an eye on this for maybe after it reports earnings. And Tesla, been very strong the last couple of weeks. Reported earnings, slipped down to our key levels and the bottom of this 4-hour squeeze last Monday at 200, and then it set up a great run every day last week. A little slip back on Thursday, and on Friday, but then bounced right at key levels, 216 on Friday. It's a little hard to see, but there's a wick right here. It got right to 216 and then took right off again. Those 220s got down to our beast zone at about $1.16, and they ran up to like $5-6 on Friday. We do still have our stack squeezes on Tesla, and we're near those recent highs before earnings that we sold off from. So wouldn't be surprised to see us continue to flag here before taking off for more. Let's see, if we lose this 223, we could be coming right back down to test the bottom of the squeeze at 220, 218, where that daily 15 sits. If we can bounce around that 220, 218, that's still a higher low from Friday, and we could work our way back. Upside target getting back to this 230.5, 233. Very key levels at the top of these squeezes, and if we can push through those and start firing to the upside, we've got our first Keltner up at about 245, and the next key levels at 252, 56, 58. As the targets, if we can break out of this squeeze and this 233 and keep trucking. And just for the heck of it, I'm going to show you guys taking off all of my tools and just looking at the key levels that I provide you. You can see amazing opportunity provided by these key levels. We got up near that 230, slid back into earnings, held this 200, and then took off each day running into key levels, and that's usually where we see little reversals, right? Held that 216, coming right back up to this zone. So let's see if we can get through this zone, which has been resistance, kind of our ceiling. If we can take out that zone, we can make our way up to the next ones. If we stay below this ceiling, we'll start to come back to retest some of these levels. Wouldn't be surprised to see us slip back to this 206, 210, setting a higher low before getting through that. But it all depends on buyers and sentiment. If they keep buying, we'll get through this zone and move to the next. That Twitter deal is now behind us, and Tesla got pretty beat up. It got down near third Keltner and now starting to make a good move. So definitely going to keep an eye on Tesla. Already reported earnings and has some wind in its sails, right? UVXY. And let me bring back all my tools. Come on. There we go. So UVXY, I talked about last week. We want to see it get to the bottom of this daily squeeze and push through it to get back to 10. And that's what we got on Friday. We slipped below 10. Now we're gapping back above it. So going to be pretty key. If we can get back below 10 and take out Friday's low, we can continue down to this 9.5 where the third Keltner to the downside sits. That's for continued upside today or tomorrow going into FOMC. But if we're going to continue to pull back from this gap down, we'll likely see UVXY hold above 10, start to work its way back to 10.5 and 11 where the daily 8 and daily 50 sit. And VIX. So VIX last week said I would like for upside, like to see VIX continue its way down below 28, 27.5, 27 and get to this daily 200. And on Friday, she didn't disappoint, rejected 27, took out that daily 200 and slid all the way back to 26. Now we're gapping up to 27 and back above the daily 200. So if the market is going to see some downside today or tomorrow leading into FOMC, wouldn't be surprised to see VIX stay above this 26.5 where the daily 200 sits, push through 27 up to 27.5 and 28 where that daily 50, daily 8 are sitting and crossing each other. That's if we get downside in the market today or tomorrow. back to 28. But if we can get some more upside and continuation on this rally, looking for VIX to come back below that daily 226.5, work its way back to 26, and ultimately get to 25, 24.5, maybe before FOMC. So that's it today for prep. If you're new to predicted trades, definitely come check us out. There's a link to join our Discord in the description of this video. And for this entire week, we're going to be having a free week. What that means is you can come in and test out our technology on your options charts. You can load up our Beast tool on your options charts, and it will provide levels of support and resistance with key buy zones and sell zones. It provides us amazing edge in trading options daily. So for free week, you can come in and test out that tool live on your charts. And you can also tune in and listen to our traders all week for free. We are on the mic all day, every day, providing guidance to where the market could be going at any given point and the trades that we're sizing up based on that. So, thanks for tuning in to Prep. Definitely come join us for our free week, and we'll see everybody in the chat. Good luck this week, folks.